Hello, and welcome to REIT Magazine's weekly report. I'm Matt Bichard.
And I'm Alan Kenny. As you might have guessed from the name, we'll be bringing a weekly report to you on a weekly basis from our newly launched website, realestateinvestmenttoday.com, the online home of REIT Magazine.
Consider it a weekly roundup of the top news in the commercial real estate industry, as well as a peek ahead at any major developing stories.
In our first story this week, the U.S. REIT market held steady in October. The FTSE NAREIT All-REIT Total Returns Index dipped slightly, down 0.33% for the month. That bested the broader market as the S&P 500 dropped 1.85% in October. U.S. REITs were up 17.17% in 2012 through the end of October, while the S&P 500 had gained 14.29%. The infrastructure sector continued its strong performance in 2012, up 5.47% in October and 26.19% on the year. The commercial financing sector gained 3.13% for the month, bringing its 2012 total returns to 39.36%. Brad Case, NAREIT's Senior Vice President of Research and Industry Information, discussed the market's performance.
Even though REITs have had strong returns, dividend yields are still very strong in the REIT market as a whole, better than 3%. And in fact, for mortgage REITs, they're still 12%.
A similar story played out in the international REIT market in October. The FTSE EPRA NAREIT Global Real Estate Total Returns Index gained 0.80%. That brought total returns from international REITs in 2012 to 23.12% through the end of October. The European market led the way for the month, climbing 5.48%.
In other international news, with Japan's government preparing to allow for the listing of healthcare REITs, lender Shinsei Bank is planning to create a $1.25 billion healthcare REIT, according to a Bloomberg report. The REIT may be able to list as soon as 2014 once the government has established guidelines for listing. Japan is home to one of the world's fastest aging populations, heightening the need for more healthcare facilities, particularly nursing homes and senior housing. Takashi Fujimura, general manager of the healthcare finance division at Shinsei, told Bloomberg that the size and scope of the facilities needed to service Japan's growing demand for healthcare require access to the public capital markets.
George Youngman, NAREIT's Senior Vice President for Financial Standards, recently sat down with REIT.com to provide updates on some of the latest issues in financial reporting for REITs. Youngman said a review of member company financial statements showed that the NAREIT definition of funds from operations, FFO, has gained widespread usage throughout the REIT industry.
We examined FFO reporting for the year ended 2011 and found that over 90% of our member companies report FFO in accordance with the NAREIT definition. So there's a consistent metric for over 90% of the NAREIT member companies.
For more with Youngman on the major stories in REIT financial standards, be sure to check out our two-part interview with him on REIT.com.
And that wraps up our first ever edition of REIT Magazine's weekly report. Be sure to tune in for our next edition, which will be coming to you from San Diego, host city of REIT World 2012, NAREIT's annual convention. In the meantime, check out realestateinvestmenttoday.com and REIT.com for more news and analysis of the commercial real estate industry.